exist. But what you see now is that over the last few years, this has taken a flight, and people really want to be more in control of the money, know what is being done with the money, rather than just let it sit on a bank account, but rather and then not knowing what happens with their money. They want to be in control. They want to know that some kind of positive impact is created for a large part of that money. So 12.3 trillion is seeking yield and impact. On the other hand, in frontier and emerging markets, about 40% of the SMEs don't have access to sufficient funding. We also know that there's a shortfall of 2.5 trillion per year to achieve the Sustainable Development Goals. And we also know that a lot of governments and institutional investors and NGOs are working on it, and still we have this huge shortfall. And what we say at Lendahand is, if you really want to tackle these big global issues like no poverty, food security, fight climate change, if you really want to tackle those big problems, you need to empower citizens. And that is what Lendahand does. Lendahand provides tools for citizens to actually use their money to create a positive social and sustainable impact by allowing them to invest in SMEs and MFIs in frontier markets. It's also research has shown, by the way, that more and more people are changing their behavior, and I'm talking about from fast fashion going to slow fashion, recycling, take electric vehicles, etc. That the impact that you have with your money and investments through your pensions and private savings is 20 times bigger than your behavior. So it's really important to give people the tools to allow them to use their money to create social impact. So if you look at our portfolio, and you specifically look at the financial institutions that are currently active at Lendahand, we have them from very small to quite large, and quite large may even be for some investors still small. The largest one would be Golland in Mongolia, the third largest bank in Mongolia. And we also have a small one like Eklov in Colombia, and everything in between. And we're very proud to have these on our platform, raising funds from retail investors in Europe. So if you take a look at the map, you see that we are not specifically focusing on only a few countries. For us, it's important that it's a country where we feel that we can contribute with the retail funds that we unlock to make sure that those SMEs and MFIs can get the money from, and that is from Latin America, Sub-Saharan Africa, and also in Asia. And it's fair to say that we are beyond the proof of concept here. We started 7 years ago, and so far have raised 110 million for our portfolio companies. This year we will do around 32 million, and last year was kind of a COVID year, so to say. We did less, not because there was no appetite from the retail investors, but because we as a platform thought we're not sure what's going to happen in the next few months or time. So let's take it easy. But we're in full swing right now, and we are onboarding quite a lot of investees the last few months. So we're very happy with that. The appetite from the retail investor has always been there, and that is, I think, a very important message for MFIs, is that institutional investors, definitely there are patient investors in this space. They're there for the long term. But if you look at retail investors, they are very patient, they have a risk tolerance, because for them this is really about the impact as well. And Mongolia is a good example. When institutional investors were leaving Mongolia, we entered Mongolia because people said, that's where we want to help. This is like 3-4 years back. That's because there will always be people that have a certain connection with a certain country or a certain region. And that's why they're not looking for, hey, I can get somewhere else 20 basis points more in another country, so let's move my money from here to there. For them, it's not about optimization of their risk return profile. It's really about the connection that they have with a certain region, a certain sector. And that's the introduction of Lendahand. So I would give the floor to Per to tell a little bit more about TCX.
Yeah, thanks, Koen. I think that is a fantastically inspiring story. Do I need to, well, maybe just a quick introduction of myself. So my name is Per. I'm with TCX. I've been with TCX for the past 10 years. Before that, I worked in development finance with the Dutch development bank FMO. And TCX itself has been around for 13, 14 years. I'll talk a little bit about TCX. I just wanted to say one of the reasons that we got involved with Lendahand and with the crowdfunding sector generally is because of this, this appeal. I think it's incredibly inspiring, this idea that by mobilizing large, the power of numbers, as Koen says, mobilizing citizens as an alternative source of development finance, which comes in with a lot of purpose, is fascinating. And we've learned that it is a massive industry in the West already, and we are seeing the industry, the alternative finance sector becoming increasingly important in developing markets, which is where we also operate, and which really got us excited about the opportunity that crowdfunding offers for development finance. So I think it's a very inspiring story, and it's great to see how Lendahand has moved down that path and been successful in growing the business. Back to TCX. I mean, what we are a development finance institution ourselves. We were created by several European governments. Later, the European Union became an investor through the EC. And then all the major development finance institutions are shareholders, and also a range of microfinance investment lenders. So institutions close to the sector. That is the topic of this event, of course. And microfinance generally has been a very important part of our business. We have one mandate, and that is to provide currency derivatives in those markets where the commercial banks are not yet doing this, or where it is very difficult to get access to the commercial banks. So our product is a currency derivative in 70, 80 currencies globally. It's a unique product. We have no limitations on volume, no limitations on tenor. And because we work with probably 150 or so DFIs and impact investors, including not only our shareholders, but many, many more other impact lenders in microfinance, in energy. Because we work with all those lenders and make our product available to them, all these lenders can provide debt to their borrowers in any country denominated in local currency of the borrower. So any impact lender basically can these days lend in local currency if that is the right choice for its client, for its borrower. This is just a quick image of where we operate, basically the entire developing world. And depending on what the next slide is, Koen. Right, we move to the case study.
Yes, let's do that. So let us explain why we've decided to do this and start working on local currency products for as a crowdfunding platform together with TCX. So what we see talking to a lot of potential investees, but also from research, our educated guess, I would say, is that from all the borrowing, around 60% in emerging and frontier markets is happening in local currency. And then if you look at hard currency, that's in around 40%. So for us, again, we are looking at the somewhat smaller institutions, right? So it could, if you take into account the very large banks, etc., then the local currency actually, goes up significantly. But for us, what we see is that it's around 60%. Around 30% is in US dollars, and only 10% is in euros and other sterling, pound, yen, etc. So we are based in Europe, in Rotterdam. So we see that for us, the potential pipeline is quite small if we only look at the euro-denominated debt. So that's why we first started also introducing US dollar debt, so that we allow for US dollar liabilities, also US dollar notes on our platform. But what we also see is that for financial institutions, for companies in emerging markets, the best way for them to borrow is in local currency. Especially in the energy sector, it doesn't make sense for people who are, product specialists in solar panels to also at the same time take a huge, company risk dependent on how the currency is doing. Now they should just make beautiful product and focus on that rather than also be concerned about. But then if you look at the crowdfunding platforms in Europe that are also active in emerging markets, you see that local currency is actually 0%, and then a little bit happens in US dollars, and everything else happens in euros. And what we've done a few years ago was we did a survey and asked crowd investors, crowd lenders, are you willing to take local currency risks? And almost all of them said, no, not really, because I don't understand that. Like, I want to, if I see a company in Kenya and, I can have a certain understanding of, the credit worthiness of that company. But to understand, like how the currency will move, the Kenyan shilling will move versus the euro, I don't know. So even if I get a higher interest rate, I just don't know what I'm buying into. So no, rather not. So that's basically the homework then that we got. Like, okay, so if we really want to help MFIs and companies in emerging markets, we want to also introduce local currency, but our crowd lenders are not willing to take that risk, then obviously we need to provide a hedge. This hedging, so when we started looking at it, it's very difficult for a few reasons. So one is, so if we go to a company like TCX, we ourselves as a crowdfunding platform, we don't have a balance sheet to speak of. So it's not like we can say, hey, TCX, we are going to be your counterparty, and then we're going to make sure that everybody else will be hedged, because TCX would not want to work with a startup / scale-up like Lendahand, and rightfully so. So then, okay, so if it cannot be the platform, how about the crowd lenders? Well, that's also not possible, because the whole beauty of crowdfunding is that people can actually pick and choose their own projects. As I said before, some people have more an affinity with Mongolia than Colombia. Some people within a certain region also only want to do solar or financial inclusion, and some even want within financial inclusion also only want to do the fintech enabled companies, and some want to do more the traditional MFIs. So there are true micro investors. They can invest as of 50 euros, and it's impossible for TCX to work with them, because there's also no recourse on those investors. They do not expect that they have to put additional money in because some currency movement happened. Also, there is no possibility to net between deals, again, because each project that's uploaded to our website has its own set of crowd investors. So there's no netting possible. So not the crowdfunding platform, not the crowd lenders. How about the investees then? Well, these are typically, as I said, smaller institutions and companies with which TCX, for them it's very hard to work with those companies because of different reasons. It's operational risk, regulatory, but for them, these companies are very difficult to onboard and therefore not possible to work with. TCX works with their shareholders and with MIVs. So we came with a solution where we said, okay, we're gonna put an entity called Lendahand FX in between, and then we actually solved this puzzle, and Per will explain how we did that.
Yeah, thanks. Yeah, so that's all true. One step back is that, as Koen is saying, the energy sector, but especially also microfinance, and that's also what we see. We deal a lot with microfinance lenders, which then are our clients, hundreds of microfinance lenders, and they all face massive demand from the MFI customers for local currency. And Lendahand and similar platforms are providing a unique source of alternative finance to that same segment of borrowers, with certain additional benefits, crowdfunding platforms, Lendahand, speed to the market, very responsive. I mean, it is a really unique channel of finance to that same segment of MFIs, which clearly need and demand local currency funding. And therefore, it was obvious to us that we, as a hedge provider, should also find a solution such that Lendahand, like any other lender to that sector, can also lend in local currency. So that was the starting point. As Koen was saying, it is impossible. Look, another side note, any lender, what a lender can do is instead of lending in dollars, it can choose to lend in any currency just by simply denominating or indexing the loan to a certain currency. It's very easy to provide a local currency loan. You don't need local currency. You just need to say in the loan agreement, it is now a local currency loan by indexing it to a local currency. In principle, Lendahand could also do that, but that would effectively mean that the crowd investors would be exposed to volatility, to the currency risk, and as Koen was saying, that was just not an option. The only other option then you have is that Lendahand would start providing loans denominated in local currency, which means that the currency risk doesn't sit with the borrower, but sits with the lender, the platform, the investors, and then hedge it. So that would have been a normal solution, as Koen was saying. However, for us, as a hedge provider, heavily regulated, both externally and internally, it is very complex or practically impossible to face a platform for several of the reasons mentioned. We cannot take counterparty risk on the platform. We cannot use what is customary in derivative transactions, that the derivative position is cash collateralized. And the product that we offer is a swap, which is derivative. If we provide a swap to the Lendahand platform to hedge a local currency loan, that swap will go up and down in value. If the local currency depreciates, the local currency loan will lose value for the platform, and the derivative would increase in value. But also the opposite: if the currency appreciates, Lendahand would have a loss on the derivative, but the gain on the loan. These things balance, but the issue is that the derivative goes up and down, and that normally those swings in value in a derivative must be cash collateralized. All of that was simply impossible with the platform. And there's a number of other tweaks that were required to make it possible to hedge that platform. So what we did is we sat down with Lendahand. We worked through all of the issues which are unique in order to be able to accommodate this. We brought in the BMU, which is the German ministry, the German government, that is also an investor in TCX, and found them willing to provide a guarantee structure for us to rely on to create a very bespoke structure that will allow us to hedge Lendahand, or does allow us to hedge Lendahand. Specifically, what the German guarantor does is cater to one specific event, that is that the Lendahand's borrower would default, would be liquidated, and at the same time, the derivative, the swap, would be positive to us. That can happen. That is a theoretical, well, not only theoretical, that is, if you would have a portfolio with hundreds of loans in it, that is bound to happen, so that the borrower defaults, the loan has to be written off at a time that the swap will be in the money to us. That specific circumstance is now covered by, it would be impossible for Lendahand to meet any remaining obligations to us because its borrower has defaulted. It has no other sources of liquidity that it can use to make such payments, and therefore we had to rely on an external source. And that specific circumstance is what has been covered by, in this case, the BMU as a guarantor. Hopefully this is broadly understandable. The upshot of it is that we have developed a structure that will allow us to hedge Lendahand as a platform, which will enable Lendahand to provide loans to its customers, MFIs, that are denominated in local currency, while the swap that we have with the platform effectively guarantees to the retail investors that as long as the borrower meets its repayment obligations, interest and principal, that the retail investors will receive exactly the euro repayments and euro interest that they were expecting to receive. That is the conclusion of this structure. There's a lot of complexity in the detail, but I think the main thing is that we've managed to put something together that works, that can be scaled, and yeah, for sure will be replicated also by other platforms we expect.
Thanks, Perry. Yeah, so the big result is that we call ourselves a fintech for good, Lendahand, and we've hopefully lived up to that promise with this project at least, that we are using technology to remove frictions so that money can flow from an individual in the Netherlands, in Belgium, in Spain, whatnot, to a MFI in Sub-Saharan Africa. So the whole idea is then that 50 euros that person is investing or is lending is actually borrowing from an MFI in its local currency, and then hedging happens in between by Lendahand FX, which is a foundation, and this foundation then does a back-to-back swap with TCX. So bottom line, the crowd lender gets the principal back in euros, gets the interest rate in euros, and basically only assumes the credit risk of the MFI, and that's exactly what this crowd lender wants to do and get paid for. The investee, on the other hand, is borrowing in its local currency, so there's no mismatch there with its income, which is also in local currency, and then all the currency risk is through Lendahand FX being assumed by TCX, and TCX is unable to offload that risk in the market or keep it, warehouse that risk, and that's their specialism. So, and that's basically the strongest shoulders where to carry that risk, because not the crowd lenders want to take that risk, not the investees, but they are willing to do it. And lastly, in this case, it's a BMU, but yeah, a guarantor that steps in only when the investee defaults and the local currency has appreciated, and only for that difference then has the guarantor to step in. So I guess in a nutshell, what we did is we sliced and diced the risks and then allocated to the right parties so that this can actually work. And this is scalable, but in order to scale it up, we do need more support for that. And that's on the next slide.
Yeah, if I may, Koen.
Yeah.
Yeah, I think we have now successfully launched a pilot. We have successfully onboarded Lendahand. We have Lendahand FX, for which we can service the Lendahand platform. That contract is in place. We've done a first transaction, which is great in Ghanaian Cedi. So that has been a pilot transaction, but that pilot is ready to be expanded. What we need in order to do that is we need more support from guarantors like the BMU. So we are very interested to speak to donors, other institutions that wish to support this innovation with funding to increase that risk facility, which, by the way, over time is a self-sustaining facility. But in order to increase significant scale, we definitely need support from, let's say, guarantors, sponsors. So we're very interested to speak to anybody who is interested to play that role. Another issue is, and surely that would have been somebody's question anyway. Of course, there's always this other discussion around local currency and hard currency. Local currency comes at a higher nominal interest rate than dollar funding, which is sometimes a reason why borrowers are tempted to take the dollars, despite the significant risk that comes with that, and despite the empirical evidence to suggest that globally that is not a winning strategy. It does not, on average, it is not on average the cheaper option. It is on average an equally expensive and significantly more risky option. But there is always that discussion on the interest rate difference, and always that temptation for certain borrowers, provided they have the freedom to make that choice, to take the dollars. And that is something that we do look at. We do consider also with donors, and have put together such programs and are looking to continue doing that, that we do look at programs where, with donor support, we make the local currency alternative slightly more attractive than the dollar alternative, to encourage individual borrowers to not speculate by taking dollars, not hope for the best, but choose the local currency alternative, which is the safer product. Which makes it easier for the borrower. It also makes it easier for the lender to be persuasive. From the lender's point of view, the local currency loan comes with less credit risk, so should in principle also favor that. But it's much more easier to be persuasive if you can offer some kind of discount at the same time. We have run a program with the European Union, which was for microfinance, financial institutions, and renewable energy companies in, let's say, the more fragile economies in Africa. That has been a good success. And we're looking to expand that program and run similar programs as and when justified. So that's another feature where we are very interested to speak to donors and sponsors alike to make those things happen. Because for sectors as a whole, for the microfinance industry in a certain country as a whole, for the economy as a whole, there's no question that across the board, local currency lending to local currency earners is the more sustainable thing to do. Does lead to more resilient sectors, more resilient economies, which over time serves everybody in the country concerned. So yeah, those are some additional thoughts around the local currency product.
Thanks, Bern. Yeah, so in the meantime, as we're also in discussions with these kind of donors, we are opening up discussions with MFIs so that they, for them to see if they can indeed borrow in their local currency, tapping into the European retail investor market through Lendahand and together with TCX. Again, also for the people who joined a bit later. So Lendahand is a platform where retail investors in Europe can lend to MFIs as of 50 euros. So far, we've done that in hard currency in euros. But now together with TCX, we are able to do that in local currency now. And that was kind of a hard puzzle to solve for us. But in the end, for the MFI it's very simple. You just borrow in your local currency, and it's an alternative source of funding. So you're not borrowing from the usual suspects, the FMOs and the triple jumps of this world. You're actually borrowing from someone living in Amsterdam and someone living in Barcelona, and what we do as a platform, we make sure that we pull them together. So for you, and we take care of all the administration. TCX takes care of all the currency risk, and for you, it's a nice new way of funding yourself. So if you would like to have more information, you can reach out. Our email addresses are here on the slide. And then I'm going to stop share my screen. So this is not a webinar, this is a meeting. So if you have your camera on and you're still in your pajamas, people will see that. So I would suggest you turn your camera off in that case. So here we go. But we would like to open up the floor for questions. And this is a small setting, so hopefully it can be a little bit interactive. And yeah, please ask us any question you would like. And maybe to start, there is one in the chat that's from Herman. And he asks to me, what do you offer your own investors? And maybe Herman, can you explain a little bit more your question, because I don't fully understand it?
Hedja, if I invest in you through crowdfunding, what can I expect to happen with my money in terms of returns?
Yeah, so it depends on the sector and the region. So we do a lot with traditional MFIs, but also with fintech lenders, and also in renewable energy with PayGo systems, for instance. So typically for MFIs, you get an interest rate of between 2.5 up to say 5% or so in euros. And if you look at renewable energy, that's typically between 4.5 and 7 or even 8% in euros again. Tenors are between 12 and 48 months.
Thanks, that sounds good.
Thank you. Yeah, so so far we have raised 110 million euros since the inception, which was 7 years ago. So next year we hope to do between 50 and 60 million. So we're going to like 4 or 5 million per month is what we think we can disburse to our portfolio companies. And also the beauty of this funding is that you only, when you need money, you just put a project on our website, say for 500K or maybe even only 100K, and then it gets funded, and then we transfer at the end of the month the money to you, and you can use it. So you only, as of then, are you paying interest rate on that money. So it's almost like, I don't want to say it's an ATM, but once we have established a facility with you, you can tap into it when you need it. So please, if you have any questions, just raise your hand or open your mic. We're happy to answer.
Yes, thanks. Very nice.
Oh, there's a question from Boo. Are you open to finance a solar productive use of energy project in partnership with a company and an MFI? Oh, most definitely. That's exactly what we want to do. So we started in the renewable energy space with PayGo, but what we see is that there's so much more possible. So we, I think around 2 years ago already, we started also doing CNI. So this first local currency project that we did in Ghana was with Radavia, which is a CNI company in Ghana. But we are now also looking at all kinds of productive use, so solar irrigation, cold storage, etc. And what we typically see now as well is that, and you guys are in the space, so you probably see it even more, is that solar companies find that at one point, they're a little bit of, they're both a company that is selling product or distributing product, but they're also a financing company. And that part is actually not their core business, but it's taking a lot of their time and a lot of their balance sheets, and they want to get rid of that. And we see more and more of those companies working together with financial institutions. For us, we can either work directly with the company, but we are definitely also willing to work together with the financial institution to provide the funding, as long as the end beneficiary are the households or the businesses that can make use of the solar product. So please reach out to Bo and Boo, and we can talk more about that. I don't know if there are any other questions. We're also nearing the end of the session, and has probably already been a long day, even though the day is only halfway. So I can also understand that you're looking forward to a little break, and we are kind of in between your lunch, I guess. So I think it's best to wrap up. I want to thank the people from European Microfinance Week to allow us to explain a little bit more about what TCX and Lendahand have been doing in this space with retail investors and local currency for MFIs and companies. If you have any questions still, please reach out to us, and we're happy to answer those. And I want to thank you for your time, also on behalf of Per. So enjoy the rest of your conference.